Hey guys, it's another beautiful, beautiful Wednesday, and we're here with Get Real with Raj, presenting to you Sunny Bajwa. We're gonna add him into our live here. Give me a second here, folks. Okay guys, today's topic is mortgages. So Sunny will be joining us live here just in a couple of minutes here, folks. Oh, there we have it. Oh my God, I see stacks of files. A lot of paperwork, a lot of money there, buds.
We got a lot of stacks here, a lot of stacks.
So guys, a little introduction about Sunny.
Can you hear me all right?
He is Hey, I'm losing you there a little bit. Guys, Sunny Bajwa is a mortgage specialist. He's located in the lower mainland, the Fraser Valley. And you know what? I'll say right here, I've known Sunny for years. He's a stand-up guy. Whatever he says, he tells you how it is. So Sunny, welcome to Get Real with Raj. I'm really happy to have you here today. Yeah, tell us a little bit about yourself before we get started.
Hey, thanks, Raj. I really appreciate you taking me on today. A little bit about myself. Mortgage specialist for about 5 years now in the industry in lending. Prior to that, I was in a little bit of sales and customer service and finance, particularly in the automotive industry. And where I reside, I got a family house out in Surrey. That's where I grew up, and I've lived all throughout the Fraser Valley, Chilliwack, and Abbotsford now. So yeah, kind of familiar with the whole lower mainland.
Yeah,
and Raj and I went to school together too.
Yeah, the biggest topic right now, I'd say, in real estate or even the whole country in general is this interest rate hikes, what's happening, and the residential pricing of homes is changing. It's a big deal, and I think we need a specialist to chime in. What do you see happening? What are the current interest rates, and what are you seeing in the market right now?
You know what? The last couple of years, the market has not been traditional. You can relate with that. I can relate with that. It's been interesting to see what happened during COVID. What's happened is, there's been a lot of inflation, right? Inflation meaning price of goods, things have increased. You okay?
Sunny, I don't know if it's me. I think we're losing your audio there. Check the connection. Got them. Good stuff. Hey guys, I just want to let you know, ask all your questions. If you got questions today, this is the time. Anything to do with mortgages, this and that, get ready. We're just going to have Sunny back with us. I think we're just having a little technical difficulties here. Sunny will be joining us shortly. Just having a little technical difficulties here. Give me 1 second here, folks. So, hey, Gotham, I see that 8% of inflation. Hell yeah, we are having inflation, and the government's trying to do a lot of things to combat that, including raise interest rates. Welcome back,
Can you
Sunny.
hear me now?
Yeah, I can.
All right, so you can probably tell I'm with Rogers. Rogers, so I guess they're probably having a crap day as well, right? Can you hear me okay now?
Yes, I can. It just breaks up every now and then, but it's all good.
Okay, well, I'll do my best. So basically what the government is trying to do is they're trying to tackle inflation. Inflation currently is right around 8.3%, and they want to keep a 2% margin in between. So try to bring it down. Now, interest rates currently right now, we're looking at fixed rates close to 5.3, 5.4%, and potentially they could decrease in the next month or so. It all depends on bond yields. Now, that being said, variable rates are closer to 4.3%, about a 1% spread there.
Mm-hmm.
And qualifying rate, what that means is whatever the current rate is, you're going to qualify at a higher rate of 2%. So qualifying rate could be 6.3 or 6.9%. Does that make sense so far?
Okay, so let's get back to qualifying rate. So before we can get approved for a mortgage, all the candidates must qualify for the rate they're saying plus 2%.
That's right. That's right. This is called the V20 rule. It was introduced at the end of 2017. That's the 2% qualifying stress test rate. You know, before this, it was at 5.25%. It originally was at 4.74%, I believe, and it was increased. Yes. Now, it's at whatever the bank rate is, plus 2%. 4.34 is going to be 6.34. 5.34 is going to be 7.34. So we're looking at that kind of spread. So if you're going for a fixed rate, it might be a little bit, you might get qualified for less money. Now let's touch upon qualification. How does this impact how much money I can get you? And how about the home prices? So if interest rates are increasing, ideally, or the thought is, you know, if my budget is $2,500 a month, I make $60,000 a year, you know, and now interest rates are 5%, and that only gets me, like my payment, that only gets me $500,000 when before it got me $700K, your budget automatically drops.
Okay.
So either you look for something in that price range, or you wait and hopefully that price point comes down. That's all dependent on sellers, if they're willing to drop it down that much, because it all depends on what your personal situation is. If you bought a home for a $700K and now you're gonna drop it down to $500, you may not be inclined to do that. So you may just ride it out.
Well, right now, what we're seeing in the market from the peak, January, February to now, homes that were like 1.5 are at 1.3. They've already dropped 200,000. Townhouses have dropped quite a bit. And we're noticing lower mainland, Fraser Valley, Abbotsford, and Maple Ridge definitely have dipped quite a bit compared to what they were at the peaks. And now I'm just seeing a lot of people waiting and seeing. Are you noticing a lot of people, they're not getting qualified, right? So we're...
Well, my clients
they're getting qualified.
They're still getting qualified. They're getting qualified, but they're getting qualified for a different amount now. So that being said, there's also there's a couple of different components that are in the mindset of the buyer and the seller and general people. And my opinion is the fact that, you know, post February onwards, you know, things started opening up a bit. A lot of people probably decided, hey, you know what? You probably noticed a lot of people having weddings.
Yes.
Parties, events, vacations. So that's the kind of sentiment that's changing the market a bit too, because I think a lot of people last couple of years got frustrated with the market and said, you know what, I'm going to step back. I'm going to go enjoy my weddings or families or having kids or going on vacation. That sort of thing. Interest rates going up. People are thinking, okay, I'm going to pump the brakes. I'm going to wait a bit.
Yes.
Typically, September, the sentiment changes, right? Back to school, back to work, off vacation, gotta get things in a row, get my ducks in a row. So typically that's when we start seeing more movement in the market. That's historical. Does that mean it's gonna happen every time? Not necessarily.
There's a good chance, so I'm noticing that as well. A lot of people are on vacations, a lot of people aren't in town, and people are just like, hey, let us enjoy our life. Then once we come back, kids are back in school, okay, then we'll start thinking again.
Absolutely.
Right?
Absolutely.
So, but interest rates, okay, so the hikes have made an effect. I think me and you can both agree. So on average here, just so a person can do basic calculations, not you know, it's not exact, for every 100,000 of borrowing money, what kind of payment are you looking at?
You're looking at about $500.
$500. So guys, the ones out there that you guys are looking for a home to buy, on average here was, you know, $500 per every 100,000. So if you're looking at $1 million, it's a $5,000 payment, right?
Yeah, theoretically, roughly. Like depending on what kind of mortgage product you're looking for. If you're looking for a line of credit, it may be a little bit more, and if you're looking for a mortgage, it could be between $400 to $500 per month, and that's projected to change, either increase or decrease depending on Bank of Canada's prime rate.
So that's another thing. We're hearing they're saying this year, I think they got another 3 possible interest rate hikes, possibly. What have you been hearing in the mortgage broker side there?
So these dates have always been around, even in the past as well, but a lot of people have these dates memorized better than their kids' birthdays now. Like, they're just like, September.
I don't blame them.
October.
I don't really blame them.
You know what? Ultimately, it's budgeting, right? People are going to make sure they remember these dates, because a lot of my clients will call me, or even my realtor colleagues say, my clients are waiting till September 17th. They're waiting till then, right? Or they're going to wait till October because that's going to be the next goal in their mind, right?
Yeah.
And it's understandable because it's all about budgeting. People have this in the top of their mind because they want to plan for the future and they want to watch their nest egg and their savings. So that being said, we got to watch what the government's doing, what the Bank of Canada is doing, and what inflation is doing, and the general global economy, because they're all intertwined in one way or another.
Yes. Yes. If political landscape changes, we got to change right before elections. We've seen in the past, things can, they crank the interest rates down, policy change. We don't know. But
yeah, and that's the main thing. Now, if clients are asking me, hey, Sonny, I want to buy something in the future, what do I do, right? So my clients in the past few months, what they've been doing is securing themselves either credit available for future, not to use right now, because remember this, 3 months ago, your home was worth X. Now it's worth Y, meaning that there's a spread and a difference. So my clients 3 months ago, if they got a line of credit on their home, they got this much more than the clients that are getting it now.
We got a question right here from Mr. Fame Ranu, I think. Sorry if I pronounce it wrong, but if Bank of Canada hikes interest rates, why does credit line interest rate go up too?
Okay, so they're intertwined. So when the Bank of Canada increases their prime lending overnight rate, that is what the rate the bank offers. So the prime rate goes up by 1%, your line of credit rate goes up by 1%. Those aren't typically fixed rates. Those move with prime, bank's prime. So Bank of Canada says 1% up, all the banks' prime rates increase as well.
So guys, if you got a line of credits, start paying them down.
Yeah, I mean, the beauty of a line of credits is, this could be a good thing or a bad thing. You can have interest-only payments. So if you have like $2,000 a month you're throwing in, and you're like, you know what, I'm a little bit short cash for next month, I'm only going to pay $700. You can do that. That's the kind of nice thing about a line of credit. But another good thing about a line of credit is you can have it available on your property and not use it. You know what I mean? Just let it sit there and you're not paying for it. But the challenging part is, as the lending landscape, you've heard this word called quantitative easing.
Yes.
Now you heard about the new phrase, quantitative tightening. Mm-hmm. They're tightening up the taps here. So if you're thinking, you know what, 3 months from now, I'm going to get that line of credit, I'm going to sit back and relax, watch the market. That I would probably recommend against, because why sit back and wait till you need the funds and not be able to get it, or have it and not need it, right? So that's what I'm advising my clients is, if you're thinking about the future, doing something, have it ready, then sit back and wait if you're looking to do that.
I totally agree with this, because right now, could the market go even lower? Depends. If the interest rates do go up, let's say if they went up 1% the next time, I don't think that's going to happen, but I'm not a fortune teller here, but if they go up, there's, you need to have the funds ready. If the prices go down, if you can't if you don't get approved for it, what's the point? The pricing can go down all they want, but you should talk to a broker right now so you're ready to rock when the time comes. You need to roll with the punches, right? But if you're not even ready, you're not prepared. They say the war is won in preparation. So I think the first step is right now, go to your broker, whether it's Sunny or someone you talk to, start laying down your paperwork, getting it organized, understanding where you stand right now.
Absolutely. Some of your clients, some of you people might be self-employed and they have their own business, and you're thinking about, how much income do I need to qualify for X amount of mortgage? This is a good opportunity while the market is, not as busy as it was the last couple of years, to actually sit down and chat with someone like myself or Raj and work out a plan. Because last 2 years, I'll tell you right now, clients were calling off the hook, get me some funds, I want to do this, I want to do that. Everybody was very busy, right? And you don't want to be in a position that once all my investor clients, your investor clients, are out there purchasing, and you're sitting there thinking, let me pick up my documents.
So I know a lot of real estate agents, a lot of other guys are just, oh my God, the market's like falling, the sky's falling down. I'll be honest, my phone's been ringing off the hook. All my clients that are investors, they own businesses, they got cash lying around. I know some of these guys didn't buy it because they're all like confused with this, COVID situation. A lot of people were. So there is cash on the sidelines. now they want to reinvest in the market. They're all getting ready right now. I'll tell you that right now. Like all the real investors, they're getting ready. When the time comes, they see an opportunity, because right now I'm noticing there are opportunities coming, and they're talking to guys like Sonny and getting approved, or getting the line of credits stacked up. So if they need the extra cash, they're not running around. But what would you say is better, a line of credit or just a standard mortgage?
All depends on what you're going to do with it, right? If you're looking for a standard variable mortgage, you're going to have a fixed payment, and you're going to make interest and principal payments to it. You can extend a mortgage to 30 years. A line of credit can only be 25 years. So typically it's going to be a higher payment. With a variable mortgage, you have 3 months interest rate penalty if you decide to break it, which is nice for somebody that's looking to potentially make some changes. Or they might go to a different lender or sell the property and buy something else. With a fixed rate mortgage, you're going to be setting it and forgetting it. You know, at this kind of time, it might be a good thing if you're like thinking, you know what, I'm going to set it and forget it. I'm going to stay in this home for a long period of time. But the negative drawback for that is there's a larger penalty associated with a fixed term mortgage. Now, with a line of credit, it gives you ultimate freedom. It's going to be a little bit of a higher payment. You can make interest-only payments, but you pay it off whenever you want, and you can reuse it back and forth whenever you want. Don't have to requalify. That's the beauty about a line of credit. So somebody that may be in a self-employed income, something changes in the future, they can always have that line of credit available. Almost like a credit card, but not as high rates.
Got it. So that's, we got one other question here. We got Jazz Joel asking, is the rule of thumb 65% of your home value minus your mortgage amount?
65% of your home's value minus 80% is what the bank can lend on the home.
Yes.
80% of the home's value based off of your income. So it doesn't matter if your home's worth $10 million, and that doesn't mean I can get you $8 million. You have to be able to qualify for that stress test payment. So
it all depends on your income. If you have enough income to back up the stress test, that you can handle those payments based on 7%, like you said earlier, 2% plus the bank rate. Okay.
Like the bank said,
another one.
You have to show the ability to pay, and that's to protect yourself. Because there could be a lot of people out there that could say, you know what, my house is worth $2 million. I'm only owing $100,000 on it. I want $700K to go buy this property. But if you don't have the ability to pay it, you can put yourself in a predicament that you can't pay it. So that's why banks protect clients, to make sure that they can qualify for that payment.
Yeah, because I'd say a lot of people are property rich, but when it comes to these payments, I think that's why Bank of Canada is much stronger. Like Canadian banks are much stronger than states because of this reason. I think they've taken these measures to protect the consumers. We got a question from Akash here. Do you see house prices going back up by next year?
Going back up by next year, that would definitely, in order for house prices to go up next year, a couple of things would have to happen. Inflation would need to be brought down within 2% or lower, and then interest rates would need to come down. Now, are interest rates going to come down next year? That's anybody's guess, because you have to remember, guys, there's still lots of stuff that are going on that's pushing inflation up, because you have to look at shipping. Are all those backlogs been handled? If those haven't been handled, then inflation is going to remain a little bit higher. Cost of goods, fuel, you got a big truck, Raj, you know how it feels, right, with the gas prices nowadays. So they're coming down a little bit, but I mean, we got the little sports cars, that kind of stuff. We're feeling it right now. So once that stuff starts coming down and inflation starts reducing, I can see interest rates potentially dropping as well. Will the prices go up? Yeah, they should go up. To what level? That remains to be seen, because that's also fueled by demand. And now let's talk about demand as well. Raj, you're probably well aware of this as well. Immigration. Immigration is another key aspect of real estate demand as well.
So guys, I'm going to share something with you. I am noticing a lot more product in the market, but mind you, when we're looking out there, not all product, there's not like the perfect house for everybody. Like I'm noticing a lot of BC boxes come in, a lot of rental property style investment type of properties are coming on the market, but nice quality homes, there's still not that many out there. And those price homes are still selling. The good quality homes that people want to live in are still selling and they're still fetching decent amount. It's only, just like you said, supply and demand. For certain products where there's too much supply and not enough demand, those homes that we are noticing coming way down. If we look at the long-term guys, the immigration, we're already noticing guys that are, I'm already talking to guys that are going to be PRs in the next 2 years. They're bringing a like a bank full of cash with them. And I'm surprised about the money that they're bringing. It's not little amounts. So I think in the next couple of years, this is a good time to take advantage of this market. If you qualify, find out, get in this market, because I don't see Vancouver in the future being an affordable city. I think we're going to have a large rental market. I'm talking to a property manager this morning, and he's like, Raj, the rents are going insane because, like you said, Sonny, people are not getting qualified. So either they're buying something smaller, but the guys that don't want to buy something smaller that are waiting, guess what? They're jumping into the rental market. And I think they're messing up the rental market and making the prices go skyrocket up. I think we're going to see higher rental rates next year. That's what I'm predicting, higher rental rates. And give it 2 years, we're going to have more immigration, more money from outside coming here permanently. And this is going to be a major rental city. That's my 2 cents.
You know what? That's
all my developer friends that are into development, they're slowly getting into the rental sector right now as well. So price point is going to be out.
I agree with you on the rental market. And because of the lower mainland strong rental market, that's what's giving upward pressure on prices from falling down so much. Because remember, if you can't live you have to live somewhere. If you can't buy it, you have to rent it. And if you're going to need to rent it and you can't qualify the current rates, there's going to be a bottleneck of people that are trying to rent. I've even heard of rental offers, like multiple offers coming in for rentals.
Mm-hmm.
Right? So it depends on which market you're in. Yeah.
I was having a chat with Jason Gugura from Fraser Valley there, and he was telling me, he's like, dude, the rental market is insane. He's like, everything's renting, boom, boom, boom. Typical slowdown in December, but I think next year we're in for, if things don't change, I think we're going to have a lot of rental, no vacancy rental, the way it looks like it.
It's potentially going to look something like that. Rental market is actually pretty strong right now, like I said, and that's what's motivating a lot of people to purchase those properties. Like you said, it's all the cleaner, the more, I guess, the higher level products is what people are purchasing.
So, guys, do you guys have any questions for Sonny? Shoot them our way. We got Sonny here. He can answer all your mortgage questions. We kind of talked about rate hikes. We've already had a rate hike. It's affected the market. And right now, me and Sonny are both saying that, hey, if you want to get approved, right now is that time to at least know where you stand. And if you have line of credits or want to get a line of credit, now is the time. Because in a couple months from now, we do not know what your home's going to come at. They're saying there's going to be a recession. Recession's 1 to 2 year. I think that's, would you expect a recession 1 to 2 years? Like, I don't see the prices going up like crazy for at least a year.
So I mean, a recession was defined as 2 quarters of negative growth in GDP. Now, I believe the states just did that, 2 quarters of negative growth. Now, I'm not an economist. I'm going to say that up front, but I do read a lot of these different stats and all that. So it looks like that's potentially maybe happening there. Does that mean it carries over here? It's really hard to say, but that doesn't, you got to remember, the word recession sounds like, oh my God, things are really, really bad. Well, sometimes you need these corrections in the market to keep things healthy and stable. And unfortunately, there is going to be some downsides because of that as well. But there's a lot of upside potential in this part. And that's what I'm trying to get at. If you're somebody that's looking for a home in the next 60, 90, 120 days, or even 6 months, if the qualifying rate increases, that means your affordability is going to decrease. But if you don't get pre-qualified beforehand, you're kind of setting yourself up for failure in the future, because if you can borrow this right now, you get locked in with the bank for 4 months, the prime rate goes up, but you're already locked in here, you still qualify for that house or even something better. So you have some negotiating and buying power. So when Raj is out there trying to get you the home, you're like, hey, I still qualify for this. The price came down. Raj can really get out there and hammer some things, hammer the prices down for you or get you the home you want.
Guys, so like Sonny said, If you are even thinking of purchasing a home, and you're like, oh, I'm just gonna wait. What he just said, you should, I'm gonna repeat it again. What Sonny said, get pre-approved now. You don't necessarily have to buy now, but at least you have a window of opportunity that you can use and take advantage of the downward trend in this market. How down will it go? Nobody knows, but I'll tell you right now, this is Vancouver, folks. The projection long-term is going to be up. It will go up because me and Sonny both know. Sonny, you're getting clients. I'm already getting clients that are ready to put a lot of money into this market. And typically, we've seen this in the past. Yes, there's a dip, but even if you bought at the drop or the peak of every market throughout history for the last 30 years, you would have still seen up gain, right?
Yeah, absolutely. There's definitely a lot of potential in our market here. And like I said, there is a transition happening, and there is probably about 70% of people that are looking to qualify now for a future purchase. And there's some people that are finishing off their purchases right now.
So to end it off, Sonny, do you have anything you can tell us a little bit about to end it off? What do you got?
Okay, let's try to end it off with a positive note. So, a good friend of me told me, I was chatting with him yesterday, and, the sentiment many times in the market could be, stress levels can be elevated, right, for many people at this time, because uncertainty is there. Uncertainty has been around for a couple of years, but one thing we have to remember is we got to be able to follow the stats, look at the past. It could be a good indicator of what the future is, and also just be prepared. Be prepared to take whichever step is necessary, and try not to dwell on any sort of negative things that may have happened in the market. Just be prepared to be able to make some positive gains, because there will be some winners in this market. There definitely will be, because whenever there is a potential of a recession, there is a major boom and a growth.
Yep.
Period.
I think every recession there's winners. So I agree with Sonny. Bang on, folks. Guys, reach out to Sonny if you guys need any mortgage information, any help. You got Sonny's information right now. Follow him, and Sonny, you'd be happy to help them, right?
Absolutely.
And one more thing, guys, we need to see this guy's Grand National come out. And me and you, I don't know, we got to do this cruise, brother.
I'm waiting on you, man. The car's all fueled up.
On a side note, anyone with an old school car, any nice vehicle, me and Sonny are going to be lining something up in the next 2 weeks, most likely. If you guys are interested, DM myself or DM Sonny. We're going to be doing this. Right, Sonny?
100%.
Okay, guys. Have a good one. Have a good one, Sonny. We'll catch you around.
Take care, guys.
Take care.